Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again at euro currency. Today we, as usual, prepared a weekly report, and since currently summertime, guys, and actually the news stream is also becoming narrower, so we don't have a lot of news as before. So in other seasons, besides some news becoming something common, so markets going in habit with this news, such as CPI numbers, payrolls, regularly same mantras from the Fed. It's these news are not making the same impact as it was previously, and that's why I do not know have you signed this or not, but it is obvious that we could see that in the news stream, the China gradually is coming on the first stage. And so lots of attention paid to the situation in the Chinese economy, a lot of attention paid to the relationship between the United States and China, as geopolitical, as purely economical. And we think that this time has come to speak a bit more about relationship and how it actually could impact on the United States dollar in the nearest perspective and in longer term perspective, and why we think that current rate policy in the United States is mostly the geopolitical weapon, the tool, rather than instrument to control the inflation inside of the country. We think that the high interest rates in the United States are aimed more to hurt the Chinese economy rather than to hold inflation inside it. Yes, this is some kind of the byproduct, and officially it's just officially it is showing that yes, Fed using this Fed rate to control the inflation and as a pure tool for managing the domestic interest rate policy. But probably we have mentioned in the Telegram a few important moments. So first of all, Bank of America said that we should go in habit with the 5% interest rate on the 10-year yield. This is new, let's call it as this is new regular interest rate yield, and we should not expect some drop back to the 0 rates or 2% rates. So there is a yield around 5%. It's a new reality for United States economy. This first moment. Second moment, Fed minutes shows that lots of members of the Fed are worried about the high inflation. So all this stuff together, so if you will read the report, you'll understand it better, but all this stuff together tells that I suspect that this is really a geopolitical tool, as United States would like to make with the China the same thing that they have done with the Japan in the 80s. You probably do not remember that, but in the 80s, Japan economy was shows the superb results. It was really on a rally growth, very fast, and it's just explosive growth of the Japanese economy. They're buying real estate in New York, so it was really very strong economy. And to hold the rival, United States have started raising rates, and very soon, with the high rates, Japan has met the big outflow of the capital in the United States, and economy has crashed, and they turned to some stagflation that were lasting for recent 20-30 years. So something of this kind, I think, that they would like to make with the China, and that's why our suggestion is that we should forget about the weakness of the United States dollar in the long-term perspective. They will hold high interest rates as long as they will need to fight and to make impact on the Chinese economy. And we think that now it is more geopolitical tool rather than some instrument to control domestic inflation and to regulate some other statistics inside the country. So this is just our opinion. If you'd like to read report, and you will see some facts and arguments that we are using. Speaking about the short-term perspective, actually you could see that on Friday euro was able even to touch our 108.46 target. It has moved even slightly lower and touched the COP, this ABCD pattern 618 extension. That creates an agreement with the 618 support. So market right now stands at the agreement support. That's why we think that for the daily traders, since daily traders have bearish context because trend remains bearish, now daily traders should sit on their hands and wait for a bounce. Once this bounce will happen, daily traders could consider new short entry. So currently it's not best area for taking the new short position because market is strong support. Next destination target on the daily chart will be around 107, which is perfectly agrees with the weekly oversold level and 107.50 fib support on the weekly chart. This will be next destination point. Speaking about short-term traders, intraday traders, well, they could consider taking the long position, but we prefer to get some more confirmation of the bounce. Yes, we have these nicely looking divergence with the MACD on the 4 time frame chart. We have slightly choppy price action, but we do not have yet clear some attempt to show the thrusting action, something of that sort, attempt to form some bullish reversal pattern. So once we will get it, theoretically intraday traders could consider taking the long position. And with the upside action, it might be a few interesting situations, a few interesting options. First of all, minimum destination point probably will be around 109.30, is retesting of these lows and previous consolidation, although I think that more probable that we will get market somewhere around 108.60 to 108.80. We will see. This is a reliable conference resistance area. But take a look what will happen if market will break it up. We are going to the 1030 and we could get nicely looking reverse hand and shoulders pattern in this case, right? So it means that upside bounce might be more significant, more extended if it will happen, if market will be able to reach 1030 area. In this case we could get something of this kind. That's why we need to see what will happen around these two levels, and well, that's two levels that daily traders could consider for taking the short position. But be careful, do not sell if you will see some explosive upward action. You will see a strong upward candle. It would be better to do nothing. Only gradual slow action in the way of some ABCD, it might be okay for considering taking the short position. So that's two moments that we have to control this possible upward action. And that's also that intraday bulls should keep an eye on if you'd like to take the long position. Supposedly, theoretically, you could try to take long position right there without any confirmation, just putting the stop somewhere around 108.35 below 108.40 lows. But this approach, well, accompanied with a high risk, because you don't have the confirmation, market could just keep going lower and, well, you will get the drawdown. So that's why we recommend to wait for a clear bullish reversal pattern, whatever it will be. Maybe minor hand and shoulders will be formed, at least something that lets you to minimize risk and place the tight stop. That's our view. On the hourly chart, we do not see anything interesting. Yes, here we have some kind of the wedge pattern, but nothing else. So that's why we suggest that we need to wait a bit more and see what the performance will be and whether the market will provide any chance to go long. That being said, just as a bottom line, daily traders do nothing, sit in the hands, wait for a pullback to consider taking the new short position. Bulls, those who trade on the intraday charts, or on the daily chart, would not consider taking a long position because we have the bearish context. The bullish position could be considered only on intraday charts. Should wait by our view. So you could not wait, but we recommend to wait for a clear bullish reversal pattern. Once it will be formed, supposedly it is possible to consider short-term bullish position with the minimum target around 109.30, but more probable that we will see this level, 108.60, 108.80. That's our view on the euro currency.